and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on software, and my guest is Randy Watts, Chief Investment Officer at O'Neill Global Advisors. As much of the world hunkered down in the spring of 2020, software development companies that provide the apps and interactive services we need to work from anywhere saw a boom in their revenue. The global software market was worth $532.5 billion in 2020. This is the Ishares Expanded Tech Software ETF. It's up 9.9% year to date, but that's lower than the wider S&P 500, which is up 14.6%. This sector has seen some dramatic swings this year as the market first rotated away from growth and technology into reopening sectors like energy and financials, and then back the other way. The top holdings here include highly valued Adobe and Microsoft, along with gaming developer Activision Blizzard and Zoom, perhaps the one company that most epitomised the lifestyle changes of 2020. But now that we can see our colleagues and friends in person, instead of telling them they're on mute, is it still a good time to buy software? Well, let's ask Randy Watts, Chief Investment Officer at O'Neill Global Advisors. Hello Randy, thanks for joining us. Do you think investors should be working on the assumption that lots of the behaviour changes that boosted software in 2020, like working from home, will be permanent?
They're definitely going to be permanent to some degree. While people may not work every single day from home, they're likely to work at least one day a week from home. And the concept isn't even work from home anymore. It's, as you mentioned, it's work from anywhere. So I think corporate communication systems are going to have to be more dispersed, and that's going to provide a lot of impetus for software spending, as well as more e-commerce and digital content.
We've seen big swings, though, both out and then back into growth and tech stocks this year. So what about the impact of inflation and interest rates on this sector?
Clearly, investors in the U.S. right now are worried about whether we're seeing peak economic growth right now and whether there's going to be a major slowdown in growth next year. I think either way, though, I do think like software is a place you want to be over the next 3 to 5 years. And if you look at the IGV and its valuation, it's actually trading right in line with its normal historical valuation. So it's not particularly expensive, yet growth rates are actually quite good. A lot of the companies you had on your earlier slide are growing at a good double-digit rate. Also, software is becoming more of a subscription business, and therefore the revenues are actually steadier than they were previously a decade ago. So I think software is a good place to be. Technically, we like this sector.
These are companies, though, as you mentioned, with the subscriptions that are quite dominant in their markets. So is there a risk of them falling foul of antitrust moves in Washington?
I think for antitrust, it's really very company specific. If there is some antitrust, it's going to be very hard for these companies to unwind a lot of their divisions. The easiest split would be for the big three, Amazon, Google, and Microsoft, where the government could require them to strip out their cloud businesses. That would be a pretty clean break. But a lot of the other businesses are actually pretty integrated. So it's going to be very hard to actually find a reasonable way to disaggregate some of these companies. I don't think most of the major software companies are going to face antitrust. I think antitrust is more likely to occur in either e-commerce or in the social media area, places like Facebook, et cetera.
So what are your favourite picks in the sector? Where should investors start?
Well, a lot of our picks are really driven by themes we see in the marketplace over the next several years. The first stock we like is a stock called CrowdStrike. This is a cybersecurity play. It operates cloud security. It also operates endpoint solution security. The security market is growing over 10% a year. There's a lot of demand for it. As you know, basically every week we see news about a new hack that's occurred somewhere in the world. And so we see this company with very strong growth prospects over the next several years. We think their revenues can continue to grow at a 30% plus clip over the next 4 years. The stock is highly valued, so we would prefer to enter it on a little bit lower valuation. Right now it trades at about 30 times enterprise value to sales versus the overall IGV at around 10 to 11 times, but we think it's got great prospects. Another theme we like is the increase in ad budgets over the next year. We think that's really going to help the digital content space. The leader there is Adobe. This is a company right now that's growing its revenues north of 18%. They had a very good beat and raise quarter last quarter. They're a leader in their space, and we think customer spending is actually increasing there over the next 12 months. So we're very bullish on that. And then finally, a stock I actually own personally, Microsoft. Even though it's a very large $2 trillion stock, we think its prospects are very good. All three of its main divisions are growing over 15% in revenue right now. We think for the fiscal year, they're going to have double-digit revenue and operating income growth. And the stock actually trades at a slight discount to the overall IGV. So despite the fact it's a major market leader, you're actually getting in a little bit of a discount to the group. So we think that's a pretty attractive place to be. I would also note all three of these stocks went through a period of consolidation this spring and have all recently broken out of these consolidations technically. So technically, the group actually looks quite strong and these individual stocks look strong.
Thanks so much for that. That was Randy Watts, Chief Investment Officer at O'Neill Global Advisors. Well, before I go, here are some of the top stories in the sector. Software firms are under pressure to show they're closing loopholes that could be exploited by hackers after the US and allies accused China on Monday of a global cyber espionage campaign that targeted a vulnerability in a Microsoft product. The US was joined by an international coalition including NATO, the European Union, Australia, Britain, Canada, Japan and New Zealand in condemning what Secretary of State Antony Blinken called a major threat to our economic and national security. IBM beat the street as recovery in client spending powered strong growth in its cloud and consulting business. The move to work from home means businesses are relying ever more heavily on cloud computing, sending sales at IBM's cloud business up 13% to $7 billion in the second quarter. The company predicts it will become a $1 trillion business. And finally, Amazon's cloud services have shut down infrastructure and accounts linked to Israeli spyware vendor NSO Group after media investigations found it was used in attempted and successful hacks of at least 37 smartphones belonging to journalists, government officials and human rights activists around the world. NSO says its product was used only for government intelligence, while Amazon says it moved to shut down all linked accounts immediately. And that's your roundup of the software sector. I'm Elena Casas, and this is Reuters.